Welcome back to today's Morning Report Charts Analysis videos on Tuesday 16th of August with me. It's Richard Perry, market analyst at Hightech Markets. We've got sterling dollar now, and we've just had the UK inflation data, and it came in slightly ahead of expectations. And sterling has bounced on the back of that. It was improving anyway on the day. It was marginally higher by about sort of 30, 40 ticks, and it sort of jumped on the back of that and pushing higher, bit higher, sort of now about 90 ticks up on the day. So it's rebounding, and it's sort of unwinding some of this recent weakness that we've seen. The last couple of weeks we've seen sterling selling off pretty consistently, just unwinding some of that move. I don't think it's going to be a move that's sustainable. I think there's going to be a lot of volatility today because we've got a lot of data. This UK data is just one of a number of data points which could impact on cable. You've got all the US data in the afternoon, inflation, housing starts, building permits, and also industrial production. So a lot going on this afternoon that could sort of mean that cable flies around a bit today. But initially, that reaction higher is pulling on the dollar weakness that we've seen generally on the forex markets and also this UK inflation data. But you've got this overhead resistance on this daily chart around 30.60. You can see that is the old breakdown, that old floor throughout late July. That becomes new resistance. So you've still got all that overhead. I think that you've got several resistances that I'll show you on the hourly chart overhead as well. One of them being 30.35. Being Friday's reaction high before a sell-off, but you'd still say these momentum indicators negatively configured across the board. This near-term little blip to the upside, which is what I would regard it as, I think is going to give you another chance to sell. Here we see the reaction higher to that inflation data for the UK. Pretty strong move, but as yet nothing too significant in terms of changing the outlook near term. You've got these lower reaction highs throughout the last sort of week or so, couple of weeks, and as I said, 30.35 is the latest one. That was Friday's reaction high before sell-off, and I just think this is going to continue really. 30.60 I think is the main line of resistance. That old support becomes new resistance. 31 figure as well is a bit of a pivot line. Has been old lows, and then provided the basis of resistance again last week, 30.95. So I think anything that sort of starts to lose momentum in this rally, I wouldn't necessarily sell now, because obviously the momentum is behind this move. It's continuing higher. It's about 100 ticks up now, so it's I'd let this little rally higher just play it, run its course, and then the chances are that the overhead supply of all this congestion here is going to put paid to the rally at some stage. You're going to start to see it stalling and then dropping away again. I think I'd be looking out for the next sell signal, probably between 30 figure and 30.60, but generally speaking, I think this rally will be sold into. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.